Hi guys, welcome back to another episode by Mining Store. No doubt you are all scrambling doing your end of financial year tax, and today we have no one better than Adrian Forza from Crypto Tax Australia with us. Adrian, how are you going today?
Good, thanks, Will. How are you?
Yeah, very well, mate, very well. Do you want to give yourself a bit of an introduction? Let us know a little bit about Crypto Tax Australia, and then we'll get
Yep,
into all the good stuff.
not a problem. Well, I've been an accountant for almost 10 years now, and we got into crypto about 3 or 4 years ago. So,
Yep,
been in the space for a little while and saw a bit of a gap in the market, I guess, in terms of uh, accountants providing crypto accounting and tax advice
yep,
on cryptocurrency. And there's obviously a huge, I guess, barrier to entry, especially needing to know what's going on in the space, understanding what things are, and there's obviously it's a steep learning curve, especially when you're starting out. So
yeah, 100%.
um, we've there's been a lot of clients that have come to us specifically because their accountant doesn't understand crypto, and that's fair enough because everyone's got their own, I guess, speciality that they work on,
Absolutely.
and always talking to someone that speaks the same language as you always helps.
Absolutely. I
So
know
you,
back
I
in
guess,
kind of the
teach them.
2017 particular area where a lot of new people were coming into the space, personally, I found you were one of the few people that actually knew what was really going on, probably more so than the ATO and definitely more so now. But yeah, it's really good to, have someone like you in the space to make things simple or relate it back to what the ATO is putting out as a message. So yeah, credit to you, Adrian, and obviously keep up the good work. We've had unbelievable feedback from the mining store community and the members that have come through you. So yeah, really appreciate what you're doing in the space, mate.
Beautiful, not a problem. Thank you.
So we've got a fair few slides to get through, which is really good. A lot of it is going to start off with the basic kind of crypto, how to manage it, just the simple things for tax, just for traders or anyone engaging in crypto. And then we're going to dive into more of the mining specific side of things. And we'll also talk about a couple of benefits, disadvantages, and things relating to the end of financial year. So Adrian, we might jump over to the first slide there. I think we can probably skip over the start bit, which is just obviously your website and everything like that, which is very important. I'll leave the links in the description below. But if we want to come down, obviously there's a bit of a disclaimer here. Do you want to touch on anything here
Yep.
there?
No, I think if anyone wants to pause for that, they could read that, but that's fine. It's just all obviously general advice, and again, it always comes back to an individual person's circumstances. The amount of money they're investing, what their personal situation's like in terms of
Mm-hmm.
family, what other setups they've got at the moment, what their goals are. So, it's not one size fits all, and that's obviously what we concentrate on, giving individual tailored advice based on that person.
Absolutely.
So it's always best to speak to someone, and not just take, information off Facebook or something like that, which I've seen.
Yeah, absolutely. And just to hop on that again, when clients come straight to me and they haven't had the tax advice or the accounting advice, they are still in that kind of grey area. And then after they've had a chat to you, I just, from the sound of their voice, can tell straight away they're like, okay, I understand what's going on. It's nowhere near as complicated as what I thought. And I'm confident going forward that I'm following the right practices. So yep, definitely agree with that. We've got here a slide just about Crypto Tax Australia. If you want to tap on just the basics there, you mentioned it before, and then we'll get
Yep.
straight into the tax implications. Is there anything you want to tap on this slide, or do you want to move
Yeah,
straight to?
so
Yep.
so our focus obviously is on crypto. Over 90%, 95% of our clients are in the crypto space, whether they're traders, miners, investors, businesses. So that's what we do all day, every day, pretty much. And but we still offer, as an accounting firm, the normal tax return, financial statements, business advisory, structuring advice, planning, all that sort of normal stuff that accountants do provide for individuals and businesses. So, sort of, we still do all of that area as well.
Absolutely, mate. Yeah, you do cover it all, and some of our clients have even come across and started using you for normal tax advice as well, but particularly on the crypto side, well ahead of the curve. So we'll go down into some tax implications now, and I'll let you fire away there, Adrian.
Yeah, so just wanted to give a quick overview of what the ATO's view is in terms of crypto assets. So they do see it as an asset. It's not, I guess, a currency per se yet. So it's very similar to how shares, I guess, work in for tax purposes. And I mean, I guess the major difference in crypto is that you get to, there's obviously most exchanges you get to swap between coins. It's very different to, say, if you're on a ComSec exchange, you can't trade BHP for Telstra, or Tesla for Apple or something like that. So crypto to crypto exchanges are events. You just need to be aware of that. It doesn't mean that I haven't pulled the money out to Australian dollars, that's when I get taxed. That's not right. And there's also the other things that take into consideration, like spending your crypto.
Yep.
So you might have you might use like living room Satoshi to pay for a bill.
Yep.
Or you've got like a crypto card.
Yep.
So like the crypto.com or a 10x or CoinJar or something like that. You've obviously got to take that into consideration. One thing that probably people forget is interest that you pay on a loan that you might have taken out for crypto. That's obviously deductible as well, depending on what, I guess, classification you fall in. It's the same as if you were margin trading, where you've got your daily interest that you're paying because you're taking a loan out. If you're on BitMEX or Bitfinex or some sort of margin exchange as well.
Absolutely. Yeah, I mean, so to clarify those points, obviously, in the crypto world, the main point that you were saying there at the start is, traditional stocks, you can't really go and trade that BHP for a Tesla share. That kind of exchange is not available. But obviously in crypto, I can quite easily, buy some Bitcoin, sell that for Ethereum, then buy RSR or Loki or all these altcoins as well. So there is that implication there, and obviously having a chat with yourself and how to deal with that is something to be well on top of from the get-go.
Yep.
Absolutely. So the next slide here is, tapping into investors and comparing that to a trader. I think that's something that you just went over a little bit there, but is there anything on these slides that you want to run through as well?
Yeah, so it's just giving an overview of what, I guess, an investor for tax purposes looks like. So traditionally, an investor looks for long-term growth. They would buy a share or an asset and look to hold that for a number of years, I guess. So the same is with crypto, where if you hold an asset for longer than a 12-month period, you get a grace 50% discount on the gain that you might have made. So let's say you bought Bitcoin at $1,000, it hit 11,000, and you held it for longer than 12 months. That gain of $10,000 is reduced by half, and then you only pay tax on the $5,000. So that's an advantage of, I guess, holding longer term.
Yep.
In crypto, obviously, the market's a bit more volatile. There will be cases where you might not hold a coin for longer than 12 months because in crypto things can change every day pretty much. So
an example there would Bitcoin, you bought it at 10,000 and you've been really lucky, it's just absolutely zoomed up to 20 or 25,000, and you want to kind of cash in those returns despite that 12-month period tax benefit. That's kind of an example for that. Is that a fair assumption?
Yeah, I mean, look, it's great to get it a 50% discount, but what we saw, I guess, in 2017 was a lot of people buying coins at an all-time high or, around that period. And I was having conversations with clients where, look, I want to hold it longer so I can get a 50% discount.
Yep.
But a 50% discount on a loss is still a loss. The saying goes, you don't go broke taking profit. So,
yeah, exactly.
Just keeping that in mind that, yes, if it's I guess, more speculative, taking profit. You're not going to go broke doing that.
Yep.
You don't want to wait a 12-month period. You're in a loss position and you sort of lose that profit as well. I've seen that happen as well.
Exactly right. But also good to be aware that, if things are fairly stable and, there is that benefit there, just being aware, if you're on your 11th month or something like that, it might be worth taking on that benefit. But do you want to move into a little bit more about the trader side and the distinction between that investor versus a trader?
Yep. So a trader, I guess, is more about going about it in a business-like manner. Now, what does that mean? It means things like, have you done training on how to trade, right? Are you subscribed to subscriptions and things like that? How much time do you spend? How repetitive is your tasks in terms of looking at the markets? Have you got entry and exit points, and what a traditional trader would do? Whether it's day trading or swing trading or something like that, it's not really looking to hold the coin for a longer period. It's more identifying, I guess, trends based on TA and whatever it might be to make a short-term profit. That's really what comes down to being a trader is all about.
Bit more hands-on, you would say. You're watching the markets actively. You're coming in and out, probably more volume of trades. You're not just making one every 3 to 6, 9 months, so to speak.
Correct. Yeah. Look, I mean, you can still be an investor even if you have done a large amount of trades.
Yep.
Because your trading might not be systematic.
Yep.
Okay. So, for instance, I'll go back to the 2017 bull run where there was a lot of people that jumped in. They might have been trading on CoinSpot or something like that. And, someone said to them on Facebook that, this coin's going to the moon or whatever it might be. And, they've jumped on that coin and then they've done different transactions. To me, knowing the industry, that wouldn't be, I guess, a trader for me.
Yep.
They're not really going about it systematically in terms of I'm going to buy it at this price and then sell it at that price. It's just buying and hoping. And I guess an advantage of being a trader also is there's a lot of the business tax deductions and things like that you can claim. So I've got the list there.
Yep,
internet
absolutely.
Subscriptions and all that sort of stuff. And I guess a trader is more, it gives a fairer outcome in terms of where your portfolio is at the end of the financial year.
Yep.
So that's why I've got the stock take must be taken at the 30th of June. So it really goes off what your portfolio value is at the end of the year as well.
That's good. Yeah, I think it's a really good distinction to make, and it's people who have never traded before or never invested before probably are not aware of this distinction here. But obviously having that chat with yourself, Adrian, and really understanding which side of the fence that you sit on is a really important thing from the get-go. But yeah, the slides are here. If anyone wants to pause the video and take some notes down, then feel free to do so. So the next section that we have here is operating as a personal tax treatment. And then we'll move into some record keeping after that. So do you want to fire away there, Adrian?
Yeah, so this here, I just wanted to touch on because I still see people talking about a myth where, you only invest $10,000, you don't have to declare anything. That's completely wrong. This, I guess, rule that the ATO's, come up with is really about where you have bought a crypto asset such as Bitcoin, and you bought it specifically to make a purchase. So if there's a subscription or a product that you need to buy in terms of that only accepts Bitcoin, and you might buy Bitcoin today and then tomorrow you use that Bitcoin to purchase that subscription, then that might be seen as a personal, asset.
Yep.
If you've invested in Bitcoin, a year ago, and now you've decided to use some of that to, buy some groceries or pay a bill, well, it comes back to your intention of, okay, well, originally I bought the Bitcoin to invest. Now I've used it for personal. Well, the investor, I guess, rule still applies, right?
Absolutely. And just to recap that there, so I mean, it's the exact same as, I'm sitting here personally and I want to buy a car from overseas and I, go and use a transfer wise or something like that to buy US dollars because that's all the merchants accepting. That's clearly my intention. I'm clearly exchanging my Australian dollars for US dollars to buy that car. But in the other hand, if, I've kind of just bought Bitcoin originally to hold it for the next 3 to 5 years, and then I've got to look to buy something and I can actually pay it in Bitcoin. That's where, the fine line is that correct?
Yeah, that's exactly right. I mean, there's a lot of these sort of things that are coming out now that that hasn't been before. Virtual games like CryptoKitties. There's other games online where for instance, like Decentraland, where you can buy land, or there's cards. I can't remember what the name is. It's a card game where you use Ethereum. Those type of things is, there's a fine line in terms of what's personal and what's investment and all this sort of stuff. So I'm sure we're going to find out in the next few years about what the ATO thinks about that, but at the moment it's a bit of a grey area in that
for sure. And I mean, you can never really nail everything and get everything 100% clear in the eyes. I know even in, let's call it the normal world compared to the alternative financial system we're talking about, crypto, in the normal world, there's still plenty of things that my accountant comes to and says, oh look, I have to double check it, or it is a bit of a fine line. So I'm never going to get the clear 100% answer, but given how youthful this industry is, I think we do have some pretty clear guidelines for the moment that people can be aware of. So that's really good. Anything else on the personal user tax treatment side that you want to tap on there, or should we move on to some record keeping?
No, we'll get on to the record keeping.
Yeah. Okay, perfect. So this is probably one of my favorite areas. I know this is the bit where when I first came to Adrian, it kind of made things a lot more clear for me, particularly as someone who's operating a mining farm and also trading in cryptocurrency at the same time, and just how to keep those things separate, and how to keep actual clear records of that. I'll hand it over to you, but one of my favorite topics here.
Yeah, so look, I know it's a pain in the ass sometimes, but really keeping records is of the utmost importance in terms of crypto, especially because it's pseudo-anonymous, and I guess it's very hard to track in comparison to, say, like a transfer of Australian dollars between banks and things like that. So it's really important to, I guess, note down all the different types of exchanges that you might have used, the wallets that you're using. Keep it separate, maybe in a spreadsheet of the wallet addresses that you might use, or the exchanges, and noting down, especially when you're transferring in between different wallets, exchanges, and things like that, or you might have used it to buy something. That's what's really important, and really doing it on a regular basis. You might do it maybe once a month, and noting it down and taking the data from the exchanges or the wallets that you're using. It's always hard going back 2-3 years and trying to remember what's happened. You can to a certain extent, but there's always going to be transactions there that you're just not going to remember. I know from experience, other clients, when we go back to 2017 or 18, you can't remember that far, where they might have sent it to an exchange. There's been instances where I've said to clients, look, I think you've got an exchange on an account on Poloniex, and they've checked that account and they've still got some Bitcoin in there that they didn't even know about. So it's almost like free money to them.
Absolutely, yeah. So I mean, that one there, obviously that's great news for them, and finding things like that. But the main thing is there that you can really forget, how many exchanges you have or where you did send things. I think the best thing to make a point here is it's not too late if you haven't started doing correct record keeping. It's really best that you get onto it sooner rather than later. A lot of people sit there and go, oh, it's too complicated now. I'm going to turn a blind eye to it. But there's not going to be any lenience there if you get an audit. So you want to get onto it as soon as possible. It's not impossible to reverse these things and get everything neat and tidy. If you haven't got into the space yet, definitely have a chat with Adrian and basically just get things in the right order. Find out what the best practice is, how to keep record keeping from the start. That way, come tax time or at your monthly review, you can easily just hand things over in the fashion that Adrian needs it, and it would be much more simple, accurate, and it might be a lot of benefit there to yourself, and there usually is too. A lot of people don't realize the tax deductions that they can make or the benefits there are. That would be my personal advice. I know the weight off my shoulders after I had my session with Adrian was unparalleled. That's a really good point there, Adrian, that people should just get things right from the start.
Yeah, look, we go through with clients how you can keep better records, for future, but also we do look at it retrospectively to go, okay, well, let's try and gather all the records that you can. We provide step-by-step procedures and how you can get the data, all that sort of stuff. We work through it. We look through the blockchain to make sure that we haven't missed anything, do a reconciliation to a best effort. So yes, if you've done trading or mining in the past, we can handle putting that all together. It's not that you just put it on the back burner, because it's also important to have the starting point right. If you don't have the starting point right from the beginning, you're going to get, complications later on, because you might have bought different coins previously and you don't have the costs and all that sort of stuff relating to that. So, if you're, worried that can't be done, it can.
Absolutely.
So just being mindful of that.
Very good. Well, that's most of everything for, I suppose, the general taxation side of things, the distinctions between investors and traders, and just how you can basically participate in this space in the correct fashion, I suppose, and keep your due diligence up and your record keeping. Now we'll go into a little bit more about the mining specific things, and we're going to go onto the slide here with making the distinctions between different types of miners. Adrian, I'll hand it over to yourself if you want to tap into the mining and hobby investing.
Yep. So in terms of mining, there's two types when you think about it commercially. So there's mining as a business, so that's when it's more of a larger scale, and then there's mining as a hobby, or an investment type that someone's participating in. So realistically, when you look at it, if someone's a hobby miner, it's really more on a lower scale. So they might have one or two miners that they've bought. They're looking to mine that specific coin and accumulate that specific coin, and hold it, for speculation or long-term investment. They might be doing it at home, where that they might be paying, they might have some solar, or they might not even have solar, where they're not really turning a profit. Yep. Especially if you're in Australia. If you're paying high electricity rates,
30 to 40 cents, pretty ridiculous.
yeah, it's not really financially viable to mine like that. So someone like that, is really doing it, not for fun, but maybe for interest. Mm-hmm. They're looking for it, as a long-term thing. And one of the benefits is that after you have mined the coin and you hold it for a long period of 12 months, again, it comes back to that investor where you get a discount on when you sell it and all that sort of thing as well. So that's, one advantage to that. Yep. But we'll go through some of the advantages and disadvantages in the next few slides.
Absolutely, yeah. So, one of the major distinctions there, and I think if you're just playing around on your desktop computer and you've got your GPU and you're earning a couple cents a day, you're not really going into that investment territory. It's just a hobby. It's nothing really to be pedantic over. I think that the best distinction is if you're kind of engaging with a service like Mining Store, and you're using our hosted mining facilities, you're purchasing miners that at a starting price are around $3,850, and earning on average around $10 a day, and you're really scaling this up, these are the signs that you're actually doing this as more an investment or as a business. So we'll tap into the different types of setups that you can basically set up in terms of when you scale up. But yeah, that's the biggest distinction there. Look, if you're just doing a little bit, you're playing around for interest's sake, and it could be just more of a hobby. But as soon as you're really, the distinction for me is if you're engaging with our service, the host of facilities, etc., then that's when you're moving more towards an investment.
Yep.
We'll
go on to the next slide.
Go down to the mining as a business.
Yeah. So obviously on that, as you were saying, Will, when I guess you're looking at it in terms of a larger scale, so you're making a significant money investment. So this is when you start getting, 3, 4, 5, 10, 20 miners where you're really looking to scale it up and generate a passive income. I personally see mining as a passive income investment. I guess it's not as passive. There still is work to be done in terms of running it and making decisions and things like that. But when you're looking at it in terms of a larger scale, it's also about, okay, well, what sort of other things am I doing that's in line with running a business? So am I seeking professional advice? Am I getting it hosted with a dedicated premises and trying to get the best rate? So again, coming back to someone that might be mining at home, if you've got say 10 miners and you don't have a dedicated place where you're mining it from, or you're paying a huge amount of electricity, that's not really in line with what someone would be doing as running a business. Whereas, for instance, with you guys, Will, having it hosted, you're getting a really good rate, and that makes it profitable.
Exactly.
It needs to be commercially viable when you think about it. So that's what someone in business would be doing. They wouldn't just be, throwing the money away just for fun. They want to be generating an income.
Exactly right.
And someone in mining, they obviously will be trying to cover, the cost involved. They would be reinvesting back into the business, so they might be compounding and buying new miners, and obviously trying to take profit as well. That's what really it is about. It's not just about, buying a miner and seeing how it works, and that's obviously important. To understand exactly how it works. But when you're obviously getting into the mining business, you want to be reaping the rewards, seeking advice. I know you guys have the Discord and obviously helping out all the members there. So that is all part of it. You want to be in the know to get the most out of it as
Absolutely.
well.
And as we say, that's kind of when you're looking at more an investment. No longer are you paying 30-40 cents per kilowatt hour. We've negotiated our rate, and because we're hosting so many miners, it's down to 12 cents. No, you don't have to scale out your back garage and get new power transmission in. We've already got all that done. We've got all the infrastructure set up. And I think the main point that you make there, Adrian, is that passive side, that you don't need to go out and fix or maintenance or change coins or anything like that. We do all that for you, and this is where it becomes that kind of passive investment. We're going to tap into a little bit on the SMSF and how it can come under that distinction as well. But we'll carry on with mining from business. Is there any other points on there that you'd like to make, Adrian, on this slide here?
Yeah, so there's also, obviously, it's very similar to, I guess, a trader, where when you're running a business as a trader and a mining business, then it's open to a lot of the tax deductions that you can get for expenses that you pay. So, obviously the rigs that might be that you purchase, the ATO's come out with a $150,000 depreciation instant asset write-off. So essentially what that means is that you can buy a, up to $150,000 worth of mining equipment. I think that they jumped that from 30,000 to 150 now because of what's going on with COVID. And you can get that as a straight tax deduction against obviously the income that you're generating.
Definitely something we saw a lot in the past couple of weeks. We did an internal sale to our community members. We had a bit of a promotion running for 100 units, and a lot of the clients are kind of taking advantage of that instant asset write-off, purchasing the rigs now before the end of financial year. I think it's going to last until December, though. Is that correct, Adrian? You can still claim that instant asset write-off?
I believe so.
Until December.
So. Depending on whether they change.
Yeah, absolutely. Keep up to date with what's going on. It doesn't have to be before end of financial year. I think you'll make a point in terms of, obviously better to be in the earlier year because you claim that benefit first. I think that instant asset write-off up to 150K per item is until around December at present time anyway.
Yeah, look, in terms of timing, I guess timing in tax is very important. It's one of the most important issues in terms of planning and things like that. So I guess when clients ask me, look, I'm thinking about buying, a mining rig or, a laptop or something like that, should I buy it now? Should I buy it in the next financial year? And most of the time, the answer is going to be that you buy it in the financial year, especially now, we're in June. We're almost to the end of the financial year. If you buy something now, you're going to get the benefit now. Whereas if you buy it in July, then you're going to have to wait another year to get that benefit. So again, it always obviously comes down to cash flow and what you can afford. But if you're sort of, I guess, sitting on the fence, the answer most of the time is going to be to try and push that expense forward into this financial year. And that includes things like prepayment of like subscriptions and things like that. So, that's other things that you might think about doing as well.
Yeah, absolutely. I mean, we saw a lot of our members in this month, take that kind of advice on and change from a monthly subscription to an annual, particularly the clients that, have 30, 50, 200, 150 miners now, and they're on a large scale and they're trying to get as much tax benefit as possible. Really, locking in those annual subscriptions now, even some of them paying up some power in ahead. These are the kind of things that they're doing. So, yeah, really, really good point there. I think where are we up to? That's good. Do we want to go into anything else on that? Or is that pretty much everything there? Do you want to move into?
Well, it's just all the other type of. Again, it's very similar to a trader where you can expense certain items. So it's just being aware that you can do that. With a hobby miner, you're limited. You are limited in terms of what you can claim. So things like subscriptions, you can't. There's, I guess, an ATO ruling in terms of not being able to claim subscriptions against capital type assets. So that's the hobby miner. So there's a bit of a disadvantage there.
Absolutely. What I might do, I might make it clear the expenses from our business point of view that you can actually claim. So obviously there's the electrical expenses, which is around $3.20 a day per miner that you can actually claim back as an expense. There's obviously the subscription, which comes at $39 a month, or you can prepay it annually if you wish to. And the only other expense is obviously the major one, which is the piece of hardware, which the average price that we sell our miners, depending on supply, demand, what's available, is around the $3,850 mark. So, those are the main expenses. There may be some side things like you invested in a course or something like that. Is that right, Adrian? And to improve your knowledge, right. Those kind of things. Anything else that you'd say there that comes to your mind, or those are the major ones?
Hardware wallets is obviously one that's obviously really important.
Yep.
Internet, things like that.
Yep.
Training courses.
Yep.
Anything that's, I guess, relevant,
Absolutely. Very good. All right. Well, we will go down into some of the benefits and disadvantages, and then we're going to look into the actual types of structures, which is usually, when clients come to us and they decide that they want to start with, it might be 5, 10 or whatever miners, or some of them start with 1 or 2 and just get their feet wet, get comfortable with things, then look to scale up. But this is where people start to go, okay, what is actually going to be the best structure to set up my business with? So before we go into that, we will go into benefits and disadvantages. Do you want to go over these slides here there, Adrian?
Yeah, so there's the hobby investor, taking advantage of the 50% discount on the sale if you hold longer than 12 months. Now, when I do talk to clients, I'm going to skip over to the business schedule, a bit business side, where some clients have a goal in terms of where they want to split their allocation of the coins that they've mined. So that's something that I talk about with them in terms of, okay, well, if you've mined, $1,000 this month, what do you want to do with that? You might say, okay, well, I might put 10% into Bitcoin to hold that as a long-term investment. So that's okay. We just need to make sure that that's separated out from I guess the mining side, and then 10% or 20% might be due to the running costs or whatever it might be, and then the other remaining percent, you might hold in, I guess, a stable coin or cash out and use that to expand on the business. That there's some, I guess, things that we talk about, and that's going to be different for each client. That each client's going to have different goals in terms of what they want to get out of it.
Yeah, exactly right. And again, kind of relaying that back, the conversations that I have with people when they first call, if they've never mined, well, I often say, have you ever mined before? And if it's a no, I say, look, start with 1 or 2 miners, get comfortable with it all, see the coins flow in, realize it's not, fairyland and things are actually real and you can actually see them. You can sell it for Australian dollars, the rest of it. And then once you're comfortable with things, most clients look to get to that 10 miners as soon as possible. And at that point in time, they can look to follow more of like a compound mining strategy. Exactly what Adrian is saying. This is where your decisions may divert from others, but some people will follow what we call compound B mining strategy, and that's where they sell all the coins from the month and pay for their power, and then they use the rest of it to reinvest into new miners. Whereas a compound A is more of an aggressive strategy, and you're kind of mining all these coins. You're selling as much of those coins as you can to buy new miners, and just paying the power out of your back pocket. So different things suit different people there, Adrian. It really comes down to what you're trying to achieve. Obviously, a lot of people understand the benefit of compound mining, but for you, it might be that you just want to follow a simple strategy, get 10 miners and sit on those for the lifetime of the units and just cash out, the power and keep the coins for 12 months and take that tax benefit. So different options. These are the kind of conversations you have more in depth with Adrian, and you'll talk with the community members and find out what's best for you as well. But I'll hand back over to you there, Adrian, and any other points that you want to make on the benefits and disadvantages.
Yep. Yeah. So again, on the investor side, one of the things that you can't do is claim against your other income. So if you're, I guess, an investor / hobby miner, the losses can't be claimed against your normal salary and wages. So that's a bit of a disadvantage there, because it's on what we call capital accounts. And again, you can't claim, certain expenses like subscriptions because it's part of a capital asset. Now, when you do sell your coins as an investor hobbyer, it's only taxed on when you do sell them. And again, bringing back to one of the first slides is it doesn't matter if you sold it into Australian dollars or BTC or whatever it might be. That's when the taxing point occurs. So just being aware of that.
Absolutely.
So on the mining side, it works a little bit differently. When you do receive the coins, into your wallet or whatever it might be, that's when I guess the taxing point starts. So you're taking it to have acquired them at the market value, and people are going to say to me, well, how do you work that out? That's something that we work to and look in regards to all the record keeping. And mining is also a little bit different in terms of how it gets assessed at the end of the year. So that's why it's important to have clean records, because we take into account what's called your closing stock, or the closing value of the cryptocurrency that you've got on hand. So you might have mined for a month and not sold out for whatever reason. So you've got an accumulated amount of crypto, whatever coin it might be, sitting there. And usually depending on the valuation, but we might value it at market value. So it gives you a bit of a fairer outcome in terms of the position in the market at that point in time. Again, there's all the relevant expenses that you can claim as well. And obviously the biggest benefit is that if you're making a loss, which you will, in the first 12 months,
Yep.
we know that mining is, it's not a get rich thing in a month's time.
Long-term
It's
investment.
more of a longer term investment and going, okay, well, I have my upfront expenses, I'm going to get a tax benefit, especially in the first year, and you can reduce your other income, as against your salary and wages for the expenses and the mining rigs that you would have bought, and that obviously includes the depreciation on those mining equipment.
Now, the one point that I'll make there as well, and I think it's a really good thing to on that record keeping side, is if you are engaging and you've set up a mining operation and you've got coins flowing through and you might be following the compound method or you're selling them, whatever it is, just make sure that when you are selling those coins, say you're mining Digibyte and you sell it for Bitcoin to hold long term, if you decide that you want to then go and trade that for Ethereum, RSR, Loki, all these other altcoins, just make sure, and Adrian, you might want to comment more on this, you separate it to the separate entity. Is that right? You want to keep them, make the clear distinction between your mining entity and your trading entity.
Yeah, no, that's exactly right. I harp on about this all the time.
Best piece of advice you ever gave me. Made things much more simple.
Because crypto is so easily moved around, you need to be disciplined. Okay, so it's really about, okay, well, if I'm going to have a mining business, but I want to keep some for long term, you might either have a different type of entity, or keeping different exchanges, different hardware wallets, different soft wallets, whatever it might be, to have that complete separation. Because when you start mixing coins, I guess, all together, it gets very difficult to have that separation where, okay, well, I've held that Bitcoin for a year. I want to take advantage of the CGT discount.
Yep.
If they're all in the same wallet where all your mine coins are going, it gets very hard to distinguish
which entity do I claim
happening.
that on.
Yeah. That's something that I always harp on about, making everything all separate.
I think it's that, bringing back to that point, it's so important just to get things right from the start. Speak to someone like yourself. It's a free consultation. You have nothing to lose. Understand what you actually need to be doing and how easy it is when you actually set it up properly. And then you won't come into this problem. It comes tax time and your other accountant says, oh, what are you doing with your crypto stuff? And you're like, oh, I don't really know. And it becomes more of a head muddle. Definitely come in and have a chat with Adrian, get things right from the start. You won't regret it. So that's really, really good. A lot of information come through here and a lot of really good information too. No doubt people will go back and listen to a lot of these points and more than likely probably give you a call, Adrian, and get some better advice on it. But let's tap into the structuring as a business and the different kind of entities that you could set up and some of the advantages of those as well. Okay.
So there's a few different structures there. I mean, those five there that you see on the screen are the main five that people would utilize. Some more than others. The majority of people are probably going to be running the business in their own personal name. So that would be as a sole trader. You'd register for an ABN. And the main advantage for that, which I touched on before, was that you can deduct the losses from your other income. And that's obviously an advantage there. Depending on the scale as well, that might not be suitable, depending on whether or not your personal circumstances. So you might already have, because eventually, as I said, the first 12 months, you're not going to really be making a profit per se. But afterwards, and as time goes on, you're going to start generating a larger profit that's going to be going into your own personal name. So it really just depends on your personal circumstances. So you might already have a job that's paying, fairly well, and then later on, when these miners are generating a profit, you don't want to be having that profit going to your personal name and paying, the maximum rate at 48% type of thing. So there's other structures that might be more suited to you. I spoke to a couple of weeks ago, and they're going down the partnership route, which is a husband and wife. So they would split the profits and the losses equally. That's an option. There's also the option of having it in a family trust. So I spoke to someone yesterday in particular where they had it was a husband and wife. He's working, and they've got a number of children. So the advantage of that is really distributing it to the profits to all of the family members. And why you do that is because you're trying to take advantage of the different progressive tax rate system in Australia.
Absolutely.
So between $37,000 and $90,000, you're paying around 34%, and then after that you're paying 38%, and then after that you're paying 48%. So if everything's going in your personal name, you might hit that 48% mark. But if you can distribute some to your partner or some to your kids, you might only be paying at 19% or 34%. You're going to save in the long run. That's become really popular, especially now for longer term investments that I've noticed over the last 6 months. I think people are really understanding the benefits of that and seeing it as a long term structure to look at.
Yeah, absolutely. And, you have that classic example as, someone who's, later in their career and they've got 3 kids and, they're earning 250,000 plus and their kids, are still in uni and they're 18 to 21 years old and they might have a cafe job and earning, 10,000 to 15,000 a year or whatever. Maybe they're not working at all. And you can kind of set up that family trust and distribute to them, and even up to I think it's 18,000, is it, the tax-free threshold for each of those? You're kind of saving tax benefit up to that 18,000. So a trust is a really cool thing. There's obviously a lot of separating your risk and your asset side. Obviously, these are the conversations you have with clients in more detail there, Adrian. We won't go too heavy into it at the moment, but the main point is that that's the best bit about having the conversation with someone like yourself, that they describe their situation, and then you can kind of go, well, these are the advantages of going to X or Y, and really make sure that you do get it right, as opposed to turning the blind eye and just go, I'll just got to do it as a personal investment, and not realizing, oh crap, I could have saved a lot of money come tax time if I set it up right. So final point there as well, it's never too late to change. Is that correct, Adrian? So you may kind of get started on the personal and then decide, I want to move to a trust, and that's very possible.
Yeah, that's okay. I mean, there is some work involved in doing that, of course, but that is possible to do. I did that for a client recently. It was in their personal name. We moved that over to a company structure based on his circumstances. So, that wasn't a problem at all. So again, touching on the company, that's also good because there's a flat rate of 27.5%.
Yep.
That's got advantages for different reasons. There's also, I guess, a separation between yourself and the company, because it's a different entity. So that's also a structure that you might think about depending on your circumstances. And there's also the self-managed super fund option where that has a tax rate of 15%, and you can obviously utilize the capital that's in the super fund there as well, and use that as a passive investment.
Absolutely, yeah. And I think, exactly what you said with that company structure, that 27.5%, rather than running it, something on your personal and your income bracket is, maybe 30 or 40%, whatever it is, you can get that benefit where you're only, having it internally grows quicker. You get that compounding effect because you're holding the funds in and only capping it at 27.5%. And then as you say, we've had a lot of clients come through that are at the later end of their career, coming into their 60s, and the lifetime of mining is 5 years or so. That's the projection, and obviously it makes a lot of sense for them to set it up under that self-managed super sector to make sure they get the 15%, and they can probably access that. What's the age that you can access your super? Sorry, Adrian.
It just depends. If you're permanently retired, I think it's about 55 or so. It's usually 60 now. But I mean, obviously on the super fund side, if you are permanently retired as well, a lot of the income that you generate is tax free.
Yeah.
as well. So that's obviously, depending again on your life cycle, like you touched on, that is probably it's a good option as well.
Absolutely. Yeah, and again, we won't tap into it too much, but these are the conversations that people have with you. You'll ask those kind of questions, what cycle you're in, and make sure they do get set up properly from the get-go. Only final point that I make is, a lot of the clients that come through us, and they some people don't even ask the tax question, and I make sure to refer them on to you to make sure that they do get things right. And other people are really pedantic about it, and they're like, I don't want to move forward until I know exactly what I'm doing. If you do want to speak to Adrian before moving ahead with setting up a mining business, that's great. But just be aware that your mining operation might change as well. You might start with 1 or 2 miners as a little bit of fun, or small business, whatever it is, and then you might go, whoa, I can actually see that a great benefit here, and I want to start compounding, and then you might move into a different structure. So don't feel like, oh, I'm stuck here, this is where I need to be. You can move it around. It's not impossible, and Adrian will make it as simple as possible for you to do that. Beautiful. All right. Well, I suppose the last slide here is about what the process is. So I guess we've kind of tapped on it throughout, but give an overview there, Adrian, and I'll make some comments at the end of it as well.
Yeah. So it comes back to what I touched on at the start is, we understand what's happening in the space. So it's really talking to someone that understands crypto, has done mining before, has used a lot of the platforms. So I'm a really big believer of, utilizing something to understand how it works. I'm not a theory person. It's more about practicality, and practicality really is what clients value. They don't want to know the theory part. They want to know how you actually do it. And a lot of the time we help clients step by step on yes, you can do this. This is how you do it. This is how you set up an exchange, or whatever questions there are, or how things work. That's what really it's about, and what people value.
Absolutely. On that note, pretty much the main reason, or not the main reason, but a big reason why I'll use yourself, Adrian, is you do actually mine yourself as well. It's not like you're just speaking from an arm's length. You understand how this operation is working. You use our hosted facility. You're familiar with it. Actually in practice how things work, not theoretically.
Correct. Yeah, that's exactly right. And clients value that. As they also value, obviously, the ongoing tax advice that we provide. So, if a client calls up or they send us an email, hey, what do you think about this? Or, hey, I'm thinking about doing that. What's your thoughts? We're always happy to help in that regard. And, we're obviously passionate about it. That's what obviously makes, someone good at what they do, because they're passionate about what they're doing. It'd be the same with you guys, Will, that you guys are passionate about crypto and mining, so you want to always learn more and know what's going on in the space and trying out different things. It's not just a job, if that makes sense.
Yeah, exactly right.
And obviously we go through part of, a consultation. On what we do is we have a consultation for about a couple of hours, and then we have another hour, usually a week or two afterwards, to see how things are going. And then we have obviously looking at, what type of structure is going to be best for you, all the questions that you might have. So I always tell clients, listen, write down all of your questions that you have, and we'll go through all of them, and explain how things work, all the record keeping, how you can, make that systematic, and any questions you have about that. And then we also do like a quarterly review to see how you're going. Is there anything that needs to be done? And obviously, your normal tax returns, financial statements preparation as well. We obviously do all of that as well. So, it's really about trying to provide a holistic service to, the client in terms of their mining operation, and, they're investing in crypto specifically.
Yeah. I think, yeah, it's a really good point that you make. And the thing that I love about clients that do actually speak to yourself, Adrian, and then come back is, you know, you understand your investment to a whole new level. You actually understand the cash flow, the, you know, different strategies that you can follow, the tax benefits, and you can really start to pull apart and you know, benefit from the whole investment as a whole lot more. So that's kind of, you know, a really major thing. I noticed the difference between the clients that have gone through you and the decisions they make and when to sell their coins, things like that. You know, you've got to understand the investment that you're in. Yes, it is passive, but by having that little bit of an extra edge and, you know, understanding it from a higher level, you can benefit substantially more in the long run. So that's pretty much everything. It's yeah, probably one of my favorite videos that I've done, to be honest, Adrian. You know, just recapping on all the information that is in here. You know, it's definitely one that I'm going to be sending out to pretty much any client that comes on board from going forward. Definitely get in touch with Adrian. Is there anything else that you'd like to recap there, mate, or is that pretty much it for the moment?
I think we've gone through a lot today. So yeah, no, I think you know, again, if anyone's got any questions, you know, I'm in the Discord. You know, happy to have a chat and shoot me an email or yeah, on the Discord. You know, always happy to help. So
that's it, mate. Well, again, I really appreciate it. You know, the input that you've had to our community, just as, you know, a member in general and communicating with everyone, but obviously particularly from the tax side and actually keeping everyone in line and growing in the space is phenomenal. So thanks so much for that. Thanks so much for coming on today. I'll let you get to it. No doubt you're going to be flat chops at the end of the financial year right now. We've got a couple of days less to get things in line. But all the best, Adrian, and thanks again, mate.
Not a problem. Beautiful. Thanks, Will. Thank you.
Bye-bye.